Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Tuesday, November 15th. U.S. stock futures are pointing to another day of losses on Wall Street, and the markets across Europe are suffering steep declines. Fears are growing once again that the Eurozone will not be able to contain the sovereign debt crisis in its peripheral nations, and that larger economies such as Italy and Spain will soon require bailouts as well. Those concerns were exacerbated yesterday by data showing that the European Central Bank settled fewer government bond purchases than expected last week. Following the report, the yield on Italy's benchmark 10-year note is surging back to 7%, the level at which Greece and Portugal were effectively shut out of the credit markets. And Spain's benchmark government bond is now yielding 6.25%. Meanwhile, gross domestic product in the Eurozone grew by just 0.2% in the third quarter, in line with expectations. The expansion was 1.4% better than the same period last year. But economists point out that the growth was concentrated in just a few core countries, namely Germany and France. And there may be more bad news to come. Leading indicators show that there's already a sharp slowdown in economic activity underway in the fourth quarter. That report is sending the euro sharply lower. It's falling well below $1.36 against the U.S. currency. Investors are also moving back into U.S. Treasuries, sending the yield on the benchmark 10-year note back down to 2%. On the corporate front, traders are reacting to earnings reports from three big names in the retail industry, including the world's largest retailer. Wal-Mart posted a 2.7% decline in its fiscal third quarter profit, roughly in line with estimates. Rising gasoline prices and persistently high unemployment cut into spending by the company's low-income customers. But Wal-Mart did report better than expected revenue growth thanks to its international business, and it raised the low end of its full-year earnings forecast. However, shares of Wal-Mart are dropping 2% ahead of the bell. Staples is also losing ground in the pre-market, down about 1% right now. Net income at the office supply store rose 13% as Staples was able to control its costs. But sales fell short of estimates, and the company also cut its full-year earnings forecast. But one winner in the retail sector is Home Depot, up 1.5%. It saw fiscal third quarter earnings rise by 12% as same-store sales continued to improve. That prompted Home Depot to boost its quarterly dividend for the second time this year. Saks, TJX, and Dick's Sporting Goods are also out with earnings today, and after the close of trading, we'll hear from Dell and Agilent Technologies. That's the latest from Weiss Research. We'll be back after the opening bell with all the market-moving news, including data on producer prices, retail sales, and manufacturing in the New York region.